Hey everyone, good morning and welcome to POA for you. My name is Leroy and today we're going to go through O Levels 2020 Paper 2 Question 1. Now, this is syllabus 7175 and it's different from the syllabus 7087 that's tested from 2021 onwards in Singapore. Although it's different syllabus, but I think the syllabus 7175 for paper 2 question 1 is still relevant as a practice paper because by and large the questions are gonna be the same, right? It's just that instead of income statement they call it statement of financial performance now, and so on and so forth. So while I'll go through this with you, I will answer it in the format of the syllabus 7087, which is relevant for 2021 onwards. Okay, let's get right into it. Now, I've shared with you three, or rather maybe this is the first time you watch this video, but there are three key steps to approach this type of questions. This is the question that has a trial balance here, some additional information below here, and the output is a income statement, which now under syllabus 7087 it's known as statement of financial performance, and a balance sheet, which in 7087 syllabus is known as financial position. But if you hear these two words or these two descriptions, it's referring to the statement of financial performance and statement of financial position respectively. All right, now three steps. So the first step is for us to identify whether each of this item would flow into the output of A or B, right? So A is the statement of financial performance or the income statement, or B is statement of financial position, which is or aka the balance sheet. So which are the balance sheet or P&L item? Let's take a look at this. Now, this trial balance is a bit unique, right? Because it's when I look at it like that, the first part of it until selling expense, these are all statement of financial performance items, and from equipment until the end of the list, it's statement of financial position. So this is a bit easy, right? But it's not always like that in other syllabus of other questions. So I'm going to take this and I'm going to take an arrow. I'm going to cut it out here. I'm going to draw it down here, and then from equipment onwards I'm going to put B. I'm going to put an arrow and I'm going to draw it down here. All right, so that's it, step one. Now step two, we are going to work out in these additional information what are the journal entries. Okay, so let's see what are the journal entries for this. General expenses. So we have a general expense here, 20300, 570 were accrued. So which means that these out of this 20300 that you have recorded in your trial balance, the additional information is they've accrued an additional 570. So when you accrue an additional 570, the accrual double entry is your expenses will go up because you are recognizing additional expenses. Debit general expenses, and credit accruals, these are liabilities. So when you recognize an accrual, the liability goes up, so you put general expense payable, which is the new term under syllabus 7087. Before you would see it referred to as possibly accrued expenses or accrued general expenses, and this is 570. 570. Now the next one, rent expense here covers, or 48,000 covers between September 19 to 30th November 2020. So what is the financial year end here? 31st of August 2020. So the 12 months, it's from September 19 to 31st August 2020. And when you pay for this period, that means you have paid in advance for what? September 2020, October, November 2020. So 3 months. So you are going to recognize as a result of this a prepaid expense. So you prepaid expense is an asset, so when you recognize this, your asset goes up, so you debit prepaid rent and you bring down the rent expense for the year. It's no more going to be 48,000, it's going to be less than 48,000. Now, how much do you put this, what is the value for these journals? You know that you prepaid 3 months, so you paid a total of 15 months over this period, and then you multiply by 48,000, right? So this is the prepaid amount. Next, equipment costing 4,000 had been posted in error to selling expense. So selling expense contains here 12,225, contains 4,000 that should belong to equipment account. So let's correct that by reducing selling expense. Selling expense is an expense, it's debit in nature, so when you reduce that, you credit selling expense, right? Expense, and it's 4,000, and then equipment is an asset, debit in nature. When you increase it, you debit equipment. All right, 4,000 as well. Okay, next, depreciation. 10% equipment using straight line. So equipment cost is 3,400, but they just told you that you have an additional 400 here, so it's a bit tricky, right? So anyway, depreciation, the journal entries are quite standard. Just remember, you debit depreciation expense because depreciation is an expense, all right? And expense are debit in nature, and this is equipment, and credit accumulated depreciation equipment. Right, this is the standard journal entry. Now let's look at how much I should be putting this. I know it's 10%. I multiplied by what is the cost, because it's straight line, so it's 34100, and I plus that 4,000 that I added to equipment in adjustment number 3, and this is the value. Okay. Next one is for motor vehicles. Now the depreciation journal entries are standard, like I said, so these are the two journal entries, debit and credit. I'm just going to change the header so that I'm not confused, or what it belongs to, and it's 20% on reducing method balance. So let's look at reducing method balance. Reducing method balance takes the cost 5,700 and you less off the accumulated depreciation in the beginning, which is 2,0700, and then that will give you your answer. So 20% times 5,700 less 2,0700. And let me check my numbers. 5,750 instead. All right, 500 and 2,0700. So that's my answer. Allowance for impairment of trade receivables is to be 985. So this allowance account is a balance sheet account, and this adjustment tells you that whatever the balance was before, it's got to be 985 by the end of this financial year, right? So you got to adjust it upwards or downward depending on where is the starting point. So let's go and see what the starting point is. The starting point of allowance is 1220. So you're adjusting it down, right? Allowance is it's a credit in nature item. So when you adjust it down, you are debiting it. So you debit allowance for impairment of TR, all right? And you adjust it by 1220 minus 985, and that is the number, and you credit the next, the corresponding entry, or the other side of the journal entry, is always impairment loss on trade receivables, so for the same amount. Okay, now adjustment number 7. They say a batch of inventory costs 9,000 plus, you know, in the inventory account. Now it's only worth 7,000 plus. So we got to write this down because prudence principle tell us that we got to recognize inventory cost at the lower of cost or net realizable value, and the net realizable value now is much lower, right? So we're gonna debit an impairment loss on inventory and credit inventory because we're going to bring it down, right? So how much we're going to bring it down by equals to 9270 less 7280. Okay, now next one is bank loan that was taken. So the bank loan here, fully repaid you need to fully repay it by 2025. So that's more than 12 months away. And if it's more than 12 months away, then it's not a current liability. There's no current portion of the borrowings that you need to report in your current liability section. You just have to report it as a long-term liability, or non-current liability. So I'm just going to put here non-current liability, right? Liability 30,000. Okay, so that's it for section 2. Now, step 3. Let's look at what step 3 is. Step 3, you need to then, based on what you've done in step 2, update the trial balance with the balances that impact here, and also mark any new journal entries that creates new account, right? Because you've got to bring it to your statement of financial position and financial performance respectively. So let's look at this journal entries. General expense debit. So I'm going to call this, and I'm going to put this as 20300 plus 570. I'm going to mark this so that you guys can see it. So this is the new balance, right? And then general expense payable, I don't see it in this list. It's not in the trial balance, so I'm going to mark it as a new item so that I can bring it across to this. And this is a B item, which is a balance sheet or a statement of financial position item. So I'm going to bring it over when I do section B. Okay, then rent prepaid, rent prepaid. So it's a credit to rent, so rent should then go down. So equals to 48,000 less 9600, because rent is debit in nature, right? So when you credit something, it will bring it down. This is a new account, and I'm going to put it to section B as well because it's an asset. Equipment and selling expense. So debit equipment at cost. So equipment at cost equals to 341,000 plus 4,000. And then selling expense, I'm going to equals to 12225 less 4,000. All right, that's the impact of that journal entry. And then I'm just going to bring this here just so that we can see this clearer. Okay, then the next one is depreciation. So depreciation equipment, I'm going to take 170,500 plus 34,500, right? Because accumulated depreciation will go up, and then I'm going to mark this as a new item, right? And this goes to A, right? And then we have next one is motor vehicle. It's equals to 2,700 plus 7,360. This is the new balance, and I'm going to mark this as a new item, A. Next one is allowance for impairment on trade receivables. It's gonna be equals to 1,220 less 235, which is 985, which is the balance that they want at the end of the year. And this is a new item, it's going to A. This is a new item, it's going to A2, and inventory will be marked down. Where's my inventory here? I saw it somewhere. 35,300 less 1,990. And this will be non-current liability. There's no impact to the balance, so I'm just going to put non-current. And that's it. All right, I'm going to move this journal entry part down in so that I can make space for my P&L later. And I'm going to move it here. Okay, so with this, these 3 steps, you are set to prepare your statement of financial position and or your statement of financial performance, right? So remember, these 3 steps are super important because it creates a good foundation. And now in the next videos that I'm going to do, you're going to see how I'm going to transfer all these balances seamlessly into your answer for statement of financial performance and statement of financial position preparation. Now, if you think that someone could benefit from this video, please share it with them. These are free resources for you guys to practice on, right? If you like this video, hit the like button and subscribe for new content as they become available. You get notification on them. Hope this has been helpful. Always a pleasure for me, and good luck. Take care.